Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, I'm going to take again a look at Euro Yen, but in this video, I'm going to show you why strength and weakness is so important in trading the markets and is essentially going to give you the easiest strategy to trade. And I'm showing you a chart here of Euro Yen. This is built from the data set from the strength and weakness chart I showed you in the Forex market outlook. So if you haven't checked that out yet, you can go check that out. Now the yen is the orange line, euro is the blue line, and we can see for a while price was kind of trading in the same direction, and we'll see this on the chart in a moment, that between sort of November and December, actually let me just kind of bring this into the background, let me just move this over, I'll bring it back in a second. But you can kind of see November and December we had sort of two periods of range bound markets. Okay, and yes, we can kind of say it was in an overall sort of uptrend environment, but the key area for me is when the two currencies kind of flip and they start to diverge, and this gives you a strong currency against a weaker one. Now we can see here that euro is the blue line and starts to bounce and starts to head higher, while the yen continues to fall and they cross over just through here. Now this is around about the start of February. In fact, it's just slightly after. It's almost like the first week into February. And I want to just take a look at euro yen and show you that when prices are weak, or when a currency is weak and flatlining, okay, and one currency is strong, so essentially you have this happening, what the effects of the trend is. So if we go take a look at the daily time frame, we can see here that price really nicely starts to form trend after February. So if I just delete these two lines, or two boxes in here, okay, so we're talking about a potential reversal in here at the moment. But the reason why price is ranging is because of strength and weakness. So we need to see something change. That was ultimately what we were talking about yesterday. However, what we can see here is that price starts to change trend. We get the market making higher highs and higher lows, and that's suggesting to us that euro is stronger than the yen, which was shown in the strength and weakness chart. So the best way to trade this then, or the best way I've found, is to look for pullbacks into previous structure points. So I'm just going to highlight these previous structures as we go up, and then I'm going to show you a key sort of pattern you can watch when price comes down to these levels. Now it doesn't happen all the time, so you are going to miss some moves, but there is a key pattern that you can look for. And typically if we go down to the 4-hour time frames, you can look at one or two things. Now usually when price comes back down into a key point, we get sort of some false breakouts. Now this is the pattern I really like to take a look at, and you can see here, let me just actually zoom into a couple of these points. Let's start off with the top one. We can see here that as price approaches the level and retests the structure, the market forms a low point. We then start to break to the upside, we get a nice break to the downside, a rejection candlestick. Now this is the new low. Now this is important because if we just place a little line on that new low, this is where typically a lot of traders would get involved a little bit too soon, because they'll see this low test candlestick or a hammer candlestick or a sort of pin candle, and they will look at this and say, well, I'm going to buy the high with my stop loss tucked in below the low. Now what I really like, a pattern I really like to look for, is something called the false breakout. We talk about this quite often on the channel, and when we talk about sort of looking at false breakouts in range and environments, but they also come in handy at key support and resistance levels. So what you look for is when price has formed a low point in here, or a break of a sort of area where you typically say, oh, okay, I think we should go long here. What I then look for is a nice double bottom, but for the low to break the previous structure low and close back within the double bottom range. Once we get that, that gives you the opportunity to go long. Stop losses can go below the low here by a few pips or 10 pips or whatever you want to look for, and then look to trade back in the direction of the overall trend. Now going down to this one, we don't actually get it here straight away, because what I would typically look for is that double bottom pattern to come into play. We don't get it, we have to move on. However, if we come down here, we can see that price bounced into the level, creates a lower low, okay? Again, candlestick breaks the low here. If we take a look at this area, what's nice about this one is that we get the breakout close below, okay, which is this candlestick here. That's going to push traders into getting involved, especially short traders. They'll look at that breakout and be like, yep, that's something I want to be a part of. Then we get a bullish candlestick. Now, what happens in that sort of situation is people that are short see that bullish candlestick and they go, I don't want to be involved with this anymore. I don't think this is something that's going to break out. So they exit their positions, essentially adding buy orders to the market, okay? Stop losses are usually tucked in above these highs, and this is why we see such a huge rush when price breaks above these type of levels, is because stop orders are being taken out through here, so we get a lot of buy orders being triggered at that point, okay? So false breakouts are a really good way to start looking at taking positions in the market and looking for entries. Alternatively, you can look for the change in trend. One of my favorite is to look for the changes of trend, look for price to come back again, look for a similar type of pattern where the price starts making lower lows. You get these low ranging candlesticks in here. Price breaks the low of that previous low, closes back within. Nice opportunity to get long in there, okay? So a couple of different ways you can look to trade those pullbacks, but strength and weakness ultimately gives you the opportunity to be involved with these trends. Then you have to execute on the daily trend. Look for the daily pullbacks. Once price comes back into your key area of support, look at those lower time frames for changes in trend. Double bottom patterns are my favorite, but these false breakouts work really, really well. Thanks for watching this video update, and I'll catch you in the next one.